So let's get started, okay? Cool. Yeah. So welcome to Kingdom Wealth Creators. Our tagline or our motto is to creating wealth the right way. Obviously, you can create wealth the wrong way or rob someone. But I think God wants us to create wealth and in the right way. And our mission statement is to fully equip you, each of us, to create kingdom wealth. All right. So welcome to today's session. This is the evening session. There were some people who already attended the first morning session and they had a blast. There were a few difficulties technically. That's my fault. So I'm making sure that we don't have the same mistakes this time. Okay. All right. So we're going to have a 30-minute session where we'll have 2 minutes of welcoming and introduction. I will do 8 minutes of financial management, then followed by 12 minutes of investing. And then we will have a 2-minute recap and assignment. You guys have assignments, by the way. This is just like school. Okay, it's not homework. It's basically for you to do research. Research is something that's so important for investments, and so I just want to encourage you to get into this style or lifestyle of researching. And so the assignment is actually for you to research. You don't have to get back to me for answers. And then we will have 6 minutes or as much as time as we can for Q&A. All right. Now understand, on a Zoom session, after 40 minutes, it just automatically logs off. So at the end of 40 minutes, when it logs off, don't worry, you just logged off because the session has automatically ended. Okay. But at any time you need any follow-up, any doubts, please follow up with me either on email or on my WhatsApp. I will be more than willing to help you. All right. So let's start this session. Yeah. All right. Okay. So some disclaimers. Every investment has risk involved. If you store your money under your bed, it can get stolen. Or maybe your cat will pee on the mattress and it'll get wet. Okay, if you store your gold in your cupboard, someone could rob you. So every investment, whatever it is, if you put it in the bank would fail. Every investment has risk involved. The share market is equally high reward and high risk. Okay, so you really need to know how to invest. You will never have all the knowledge you need to be 100% successful. Never. So you got to keep learning. I won't be providing any buy sell recommendations, okay? But if you want to ask me doubts about stocks, I would suggest that we get into a relationship, have become friends, and then you can. Most of you are already my friends, which is a good thing. You can ask me personally, but I won't be giving any such recommendations in public on this public domain. Now, this is a free course. A lot of people have been asking me, are you going to charge for this? A lot of people are charging a lot of money for all of this. And I told them, this is free because I want to help people. But in case you want to invest into my life, just as I'm investing into your life, please, call me up and ask me. And I will gladly tell you how much to invest. Okay, so this session will be recorded and put onto KWC on YouTube. And lastly, we're all in lockdown. I have a 1-year-old daughter. Her name is Nicole. She's beautiful. In case you hear some crying or things falling, please forgive her. Please forgive my family. We're all stuck here. There's nothing else we can do. Okay. I'm pretty sure that's the same at home for you guys as well. But this is what. All right. So we're going to go into financial management. Now, this is the content for financial management is courtesy Mr. Vijay Abraham. So shout out to you if you are on the chat. I think you might be here on the chat. If you are here, I just want to shout out to Mr. Vijay. He's a great person, a great man of God, and thank you so much. I don't see him on the chat yet, but let's go into what is financial management. Okay, now I'm going to ask you a few questions. Now here's the questions. Okay, do you see this? Diversify, which means invest in 7 ventures, yes, and 8. Seek advice. A wise man listens to advice. Opportunities. He who watches the wind will not sow, and he who looks at the cloud will not reap. Finally, give. Give freely and become more wealthy. So here's pop quiz number 1. Can you tell me where this is taken from? First person to get the right answer. Oh, there you go, Samuel. Hey, Samuel, you're cheating because you already were there for the first session in the morning, okay? So I'm not going to answer your questions. Okay, so we have someone. Neha is the first person to answer properly. We will give points for both Neha and Samuel. But basically, any questions you have, you put it into the chat. I'm going to answer it first for you guys, okay? Samuel and Neha, good job. Okay, so these are actually from, we heard from Samuel and Neha. These are from Ecclesiastes and Proverbs. So you see, God speaks a lot about money. Okay, you will be surprised, but here's the thing. 2,300 out of 23,000 verses in the Bible are about money. So nearly 10% of the Bible talks about money. 11 out of the 39 parables that were spoken by Jesus were about money. And Jesus spoke more about finances than anything else. He spoke more about money than about heaven. So you see, God is really concerned about how you manage your finances. And so I'm going to talk to you about that. Okay, so what we do, there are three things that we got to do with regards to our finances. One is to sow. You can sow back into the kingdom, you can sow back into God, you can sow back into ministries, you can sow into people's lives. The second thing you've got to do is save or invest. Okay. If you're not saving, if you're not investing, you're not following one of God's principles. And the third thing is you got to spend for yourself. You got to spend money on your family. You got to, take care of yourself. That is what God intends for you to do. You can't live a life as a miser. Okay. And so you should also understand this is not just about your money. Sowing, saving, and spending, or sowing, investing, and spending is in everything that you do, relationships, your time, your energy, your skills. And so you got to know that when you sow, God will multiply. When you save or invest, you multiply. And when you spend, you're using that money. But this is in every aspect of your life. It's not just money. Okay. Sometimes we get so busy that we sacrifice family. So instead of investing or sowing into our family, we spend that time, the time or whatever was meant for family, on something else. So just a quick reminder that it's not just about money. God intends that we sow, we invest, and we spend in all aspects of our life. Okay, so this is a quick run through finances, but I want to talk to you now about investments. All right, so we're going into investments now. By the way, guys, if you have any questions, please do put it into the chat. I'll be looking at it from time and time, and I will be answering them once we get to the Q&A. Any questions regarding investments, please do ask. Okay, so here we go. Investments. Now, Deuteronomy 8:18 says, "But you shall remember Lord your God, for it is He who is giving you power to make wealth." And so you see, anybody who is able to make wealth or create wealth has been given that ability by God. Okay, it's a God-given ability. Now there are five types of investments I would like to talk about. Okay, one is cash. So when I say cash, the cash in your pocket, the cash under your mattress, the cash in your bank, in your savings bank account, in your fixed deposits. Then there is fixed income investments, which is basically something called bonds or debt instruments, which bankers like Samuel would probably know better than any of us. But these are bonds, or these are secure investments that you can buy into, saying that you're confident in the government or the company that you're buying into. Okay. And then there's real estate, properties, industries, equipment, industrial, commercial, residential, whatever properties. Commodities include things like gold, which most of us from India are very familiar with. In fact, India is the largest consumer of gold because we think gold is the best thing in the world. Okay, and so all of us tend to buy into gold. Okay, and then there's finally shares. Shares include equity, mutual funds, futures, options. But there's one thing that we all forget. We don't realize that every year inflation is rising at 4 to 5% per annum, which means if you leave money under your mattress, you're losing 4 to 5% a year. If you put it in the savings bank account, which gives you like 3% or 4%, you're losing money again. Okay, that is why God wants us to invest. Now let's look at each of. So you can see this is a chart for inflation for India. In 2018, the inflation rate was 4.86. Those of us who kept money, like a lot of money in our savings bank account, we lost money. Okay, so uh, we should be very careful of how we invest. Okay, now cash investments are things like this. Basically, they include your savings bank accounts, your fixed deposits or term deposits. Now they are typically the lowest return of all these investments, but they're also the lowest risk. Okay, nobody's going to come, steal your money away from the bank. But the risk is still there. A bank could fail. We've already seen quite a few banks that have gone under during every crisis. So a bank can still fail. You can still lose your money. But the bank investment into a bank or cash investments are basically a defensive investment. You're trying to protect your money. Okay. Whereas when you come to fixed investments, again, this is also a defensive investment, but it's slightly different from cash. Now, what is the return here? Here you can look at anywhere between 8 to 9 to 11%, depending on which company or which government you buy into. It is low to medium return. It is low risk. Very rarely do you see a government or a company fail, but they do. I want you to know in World War II, or just before World War II, after World War One, Germany became so bankrupt because they had to pay a lot of money back to the Allied powers, that the money in Germany became like toilet paper. It was worthless. So governments can fail, companies can fail. Uh, Now, one of the drawbacks of a bond is that it has a lock-in period. For example, if I put money in the bank, I can take it out tomorrow. If you put money into debt, into one of these things, into one of these investments, look at that. You have a lock-in period of say 3 years, 15 years, till retirement, la 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 la. So there's a lot of time that you can't use that money or you can't take that money out. That's the risk that you carry there. Okay. Right. Now we have real estate. Now many of us know what real estate is, property basically, but it is hard to quantify the return and risk when it comes to real estate. Also, real estate needs a lot of investment. For example, in Kerala, 1 cent of land can cost anywhere between 12 to 20 lakhs. Okay, that's a lot of money. And the thing is that once you buy that, you're locked in for a huge time. Okay. I mean, if you buy land, you probably own it for 30 years, 40 years. And so that investment gets stuck there till you get it back. But the good thing is that this is a growth investment. If you put money into real estate over the long term, you're going to see a huge gain. But again, it's hard to quantify because the data is, because the time period is huge. Okay. So we're coming into commodities and then we go into shares. Now, commodity investments, gold is our prime example, right? Everybody knows what gold is. Gold has actually risen quite a bit, while the shares were crashing in between, gold actually rose up. Everybody was putting their money, taking money out of shares, putting money into gold, thinking gold will hold. Okay, that's right, eh? Gold will hold. Okay, but there are a lot of other commodities. You have precious metals, you have oil, you have crops like rubber, sugar, and the return is medium to high. For example, like you've seen in the notes, the return on gold is 8%. So it's a medium to high risk. It needs a large investment, and it can have risks attained. For example, if you see this graph, you will see that gold went up like this, and then it shot down, right? So before we go into shares, I'm going to ask you the second pop quiz. You look at this graph, you can see that there's a green line marked up there. So from 2016 to 2019, what was the return that a person, if he had invested in gold in 2016, seen in 2019? First person to answer, I can answer his questions. 36%. Samuel, you've been ready for this. Okay. Samuel, good job. You have any questions, please do post them into the chat and we will follow up. Okay. Samuel is on fire. By the way, Samuel is from, he's a banker in HDFC. So don't get upset if he's answering all these questions. He's like, he probably just got out of office for this. Okay. So he's ready for this. Okay. So Samuel, if you have any questions, please do post onto the chat. Others also, please post your questions onto the chat. We're going to answer all of them as much as possible. All right, so that's commodities. Okay, the next thing is the thing that we all want to know: equity or shares. So equity would include shares, mutual funds, futures. Now the expected return on equities or shares is 10 to 12%. Okay, normally you would probably even end up much higher than that, but the expected return is still 10 to 12%, which is why it is a medium to high return, quite the highest return among all of these types of investments. But there is a medium to high risk because the shares can drop, it can go down, lots of issues. Just now the coronavirus came in and the share market went from 12,000 to 8,000 just in a few weeks' time. So the risk is quite high, but the risk is there for everything else. Crude oil went down, commodities went down, gold went down in between. So everything gets affected when a pandemic happens, but you might think that it's the share market that suffers the most. Now, this is a largely liquid investment, which means if I put money into the share market today, I can probably take it out the next day if I wanted to. I'm not saying that whether I would get a profit or loss, but I can take it out if I want to. And you can start very small. I started with 20,000 when I first started. but I've invested even 12 lakhs. So there's a huge range of amounts that you can invest. You can start very small, you can start very big. I think the best way is to start with what you're comfortable with. And this is a growth investment. This is probably one of the best ways that we can invest and beat inflation. Okay, so now pop quiz time, pop quiz time. So let's look at this question. Okay, now here is the chart of the Nifty. You see the blue line there. So in 2016, someone who started investing in 2016, if that person removed all his money from the market at the end of just before at the end of 2019, at that point, from here he invested here till here, what would be his return? Anyone can answer me? So he started 2016. The price was around 7,000, and then he exited out at 12,000. All right, Samuel, 72%. Philip, 58. Jason, 74. All right, cool. Yeah, I think 70 to 80% if you guess between if you calculated between there Dennis 80%. So that's good. So it's this is actually from 7,000 to 12,400, so 77. So again, Jason, Dennis, if you have any questions, I would be more than willing to answer them first before everybody else's questions. By the way, I don't see any questions in the chat yet. Please do ask your questions. The first session had a lot of questions. I'm pretty sure you guys have the same too. Okay. All right, let's continue here. Now that was question number 1. Pop quiz number 4 is this. So if a person invested in 2017 and he exited at the same time in 2020, at the start of 2020, what would be his return? So you can see that he got in. Philip, good job, 55%. I think, okay. So, and there's a question right there, 55%. Okay, and so a couple of questions. So let's quickly mention this. Okay, so how do we calculate this? Now, when I look at this range, this is 12,400, and this is 8,000. So my return is 12,400 minus 8,000. That's 4,400 divided by 8,000, which would give me 55% or so. All right, so that is 55%. If we started at 7,000 to 12,400, 12,400 minus 7,000 is 5,400 divided by 7,000 is somewhere around 77, 78%. So that's how we calculate this. Now, someone asked me a question, what is Nifty? Well, Nifty is basically the index for the National Stock Exchange in Bombay, which is one of the premier exchanges that we all would follow if we were investing into the Indian stock market. All right, cool. I hope those 2 answers helped you there. So for everybody who got these answers, we're going to ask, okay, those who learned something right now, here's your question. Very quick answer. Okay, someone who invested 2017 and exited out after the crash, how much would they make? It's a very simple answer. What would, there you go. Good. So Neha first got back to me with a 0. That's good. Dennis 0, Praveen 0. Yes. So basically someone who got in at 2017 and then, just didn't exit out at the right time, but sat there through the crash would have made nothing. Okay. So you can see someone who got in at 2016, in 4 years, they made almost 80%. Okay. Someone who got in at 2017 and got out right, in 3 years, they made 55%. Someone who got in right but got out wrong made 0%. It is as simple as that. So there is high return and high risk. It is all about deciding how well you get in and get out. So here's my clue for you. Where to start? First of all, get a trading app. If you want to get invested in the stock market, you first need to get a trading app. I personally use Zerodha, but you can use whatever trading app you would like. There is Sharekhan, there is Angel Brokering. So there's a lot of trading apps there in the market today. I remember when I first started trading, I had to physically go to a trader called Geojit. I had to go to the office and I had to buy the shares and they would come in paper format. They would send it to my house. Later, it became digital. I still had to go to the trader, and I had to tell them, I want to buy this, I want to sell this, and so they would sit on their computer and do the trades for me. But nowadays, you can sit at home, even if it's a lockdown or if it's not a lockdown, and you can do your own trades. You can decide to buy, you can sell, and pretty much it's very easy to set up too. Usually, it takes less than a day to get your trading account these days. Uh, you usually it takes less than a day, but because of the lockdown nowadays, it takes a little longer. But Zerodha is the one that I use. A lot of traders use different apps. I just use Zerodha because I kind of like it. Okay, and I'll show you the app much later. All right. So where do we start? First of all, so get an app. Second thing, please start doing research, and that's why we do assignments now. Do research. If you just go blindly in, you're going to fall into a pit. Okay, and I didn't say that, the Bible said. Okay, so make sure you do your research. Then you decide on your investment level. Do I want to go in with 5,000 rupees? Do I want to go in with 1 lakh rupees? You decide. 1 crore, whatever is your comfortable investment level, do that. Fourth thing, get good investment advice. Okay, please understand that none of us have 100% knowledge when it comes to the stock market. So please research and ask questions and get answers, get knowledge. If you don't, you're likely to fail, you're likely to lose money. All right. Now, plan for the long term. I wouldn't recommend that you get in today and get out tomorrow. You're not going to make a lot of money, most likely. So plan for the long term. When I say long term, at least 1 year. If you were asking Warren Buffett, who's the richest, one of the richest men in the world, what his holding period is, he would say forever. So for him, long term is forever. Till death do us apart. But long term can be as short as 1 year or much longer, but I would recommend at least a year. In this current market, however, because the market tends to go up and down every day, I would recommend that the stocks that you pick, don't stay invested in them for long. What you need to do is you got to buy low, you got to sell it when it gains about 5 to 10%, and then later you can get back in. That's what I did. I bought a stock called Imami the other day. Women might understand what Imami is, guys probably not. Imami is a beauty care company, and I bought into that at 171, and I sold it at 180. So I gained 9 rupees for every share that I bought, roughly 6-7% within 2 days. Okay. Okay, we got questions coming, so I'm just going to quickly answer these questions. Ads about Olymp trade. I haven't got into that. I wouldn't recommend that. It probably is real. I'm not sure, so I don't have a good answer for that. I would rather invest in the stock market rather than the foreign exchange, because that's more about forex. I would rather invest in stocks. The profits will go into your. Okay, another question: will the profits go into a bank account? This is from Jason. Well, the profits will go into your DMAT account. You have a DMAT account. When you start. When you get into a trading app, basically you had to first start a DMAT account with the NSDL, and that account is where you transfer money in, buy stocks, sell stocks, and the money comes back into that account. But you can pull that money out from that DMAT account into your bank account anytime. Can we withdraw the profit partially? Absolutely. You can put the money in, you can withdraw the money in whenever you want. You don't have to, there's no rule that you can only put in 100% and then pull out 100% at a time. You can put in 100% and then pull out 5%, 20% as you need. Okay, there's another question. Just to add, I think we should plan our investments based on our risk appetite. Absolutely, like Samuel said, some people would be very traditional. So now, what he means by that is that you can diversify. In fact, the Bible also says we should diversify, which means you should get invested in all types of investments. You should get money in gold. You should get money into the stock market. You should get money into fixed deposits. Don't put all your eggs in one basket. Okay, but it depends. If you're very young, you should have a lot more percentage of your money in probably the stock market. If you're much older, the recommendation is you put more money into fixed deposits and pension schemes. Riyanka, what is tax liability? But basically, if you make money, you owe tax to the government. And if you make about 2.5 lakhs to 5 lakhs, depending on the tax slab you choose, you have a tax liability. What is the primary difference between demat and ordinary accounts? But demat is basically an account for trading. Your ordinary bank account is just your ordinary bank account. Okay. Now I'm trying to see how Praveen's question can be answered. Yeah, so the gain percentage that was calculated earlier is the gain that we had on the investment. For example, if I buy a stock at 10 rupees and I sell it at 15 rupees, I made a gain of 50%, right? Okay, so we're going to go forward. We already did where to start. Now we're just going to quickly look at the assignment for us. And now the assignment is basically for all of you to go back and just figure it out. Okay, go research. So the first question is, what is the best trading app for the Indian stock market now? I think it's a very subjective answer. So you might have different answers. Don't worry about that. What is the best dividend yielding stock in India right now? You got to go research that. What is the name of the main stock markets in the US? Again, go research that. What is the street on which the Bombay Stock Exchange is located? Please go research that. So these are things just for you to understand the importance of research, and I will encourage you to do these assignments again. All right. So we're going to open up the sharing for a Q&A. Any more questions that we have? Okay. Here's a question from John. Would you advise to sell and buy at a much lower rate if these stocks keep crashing, or do we hold for the long term in the current scenario? Yes, a very good question. Because the market is volatile, what I do personally is, if I have a stock that I'm holding, what I do is, if I see that the market is weak and if that stock is going down, I will sell the stock. And as the stock goes down, at the end of the day, I'll buy it back. So I'm not losing out on my long-term profit. I'm actually profiting in between. Okay, so I'm actually partially booking my profits. Every time I think my stock is going to crash, I will sell the stock, and at the end of the day, I'll buy it back, or whenever I feel like. So it's not necessarily at the end of the day itself. I will buy when I want to, when I feel that I got to buy it back. And yes, just like Neha said, this is a form of averaging. Okay. So any other questions? We have a lot of questions on bulls and bears, right? Okay, so a bull market is basically when the market is going up. A bear market is when the market is going up, right? Going down. Right now, it is a bearish market, but it's also a volatile market because basically the market is searching for its bottom, okay, its trough, and so that it can go back up. It might take a little while, especially depending on the news, how fast the pandemic gets over. All right, so. Any more questions you guys have? In the meantime, let me just remind you guys. Okay, remember to do your assignment. It's not homework. It is your work. It's your research work. If you have any queries or questions, continue to contact me on my WhatsApp number. Remember to subscribe to our YouTube channel, and remember to follow our Facebook page. But before we finish, I'm going to show you some stuff. Okay. Oh, we have another question. How easy is it to set up a demat account? Basically, it's very simple. Most companies today would do it in a day before the coronavirus came, because all you need to do is you apply, you send in your PAN card number, your Aadhaar number, with you upload it basically, and a copy of your bank statement you just uploaded. Yeah, know your customer basically. So those are documents they need to file with the NSDL, and then the NSDL will set up your demat account and approve it, and then you can trade off whichever app you're using, and they will also connect. Your bank account to it. That is why they're asking for your bank statement. And then you can easily transfer money from your bank statement to your demat account and back. And it's easy as that. Nowadays, because of the coronavirus, it's taking 3 to 4 days for it to start.